Listen up. I'm about to tell you something that's going to keep you awake at night, and frankly, it should. I've been in the trenches of finance for over 4 decades. I've seen markets crash. I've seen fortunes evaporate overnight, and I've made hundreds of millions by knowing when to get UT before the slaughter begins. Right now, we are sitting on the edge of the most catastrophic asset collapse in modern history. I'm not talking about a little correction. I'm not talking about a 10% pullback. I'm talking about a complete wipeout of certain asset classes that millions of people have their life savings tied up in. And here's the terrifying part. There will be no warning. You think you're safe? You think your portfolio is diversified? Think again. The assets I'm about to expose are ticking time bombs. And when they explode, they're taking down pension funds, retirement accounts, and generational wealth with them. The smart money is already running for the exits, but nobody's telling you about it. Why? Because they need you to hold the bag while they cash out. I'm Kevin Leary, and I'm about to save your financial life. Pay attention. Let me be crystal clear about something. I don't care if this makes me unpopular. I don't care if this destroys some fantasy narrative, why some assets collapse overnight. You've been fed by financial gurus on social media. My job isn't to make you feel good. My job is to make you money and protect what you already have. We are living through the greatest financial delusion of our lifetime. People are pouring their hard-earned money into assets they don't understand based on hype they can't verify, supported by fundamentals that don't exist. And the media, they're complicit. They keep pumping sunshine and rainbows because fear doesn't sell advertising space. But I'm going to give you the real story. The first domino: commercial real estate. Commercial real estate is a dead man walking, and most investors have no idea they're holding a corpse. The work from home revolution didn't just change where people work, it destroyed the entire economic model of urban office space. Right now across America, office buildings are sitting 40%, 50%, sometimes 60%. VA can't. Do you know what happens when you can't fill 60% of your building? You can't make your mortgage payments. And when you can't make your mortgage payments on a $200 million property, you don't just lose the building, you trigger a cascade: failure in the commercial mortgage-backed securities market. Banks are already sitting on billions in unrealized losses. They're playing extend and pretend refinancing zombie properties that will never recover their pre-pandemic valuations. But here's the problem. You can't refinance forever. Kevin O'Leary on Overvalued Markets, especially not in a high interest rate environment. The commercial real estate market is looking at a potential 4,050% crash in valuations over the next 24 months. And when that happens, regional banks are going to drop like flies. We saw a preview with Silicon Valley Bank and First Republic. That was just the appetizer. The main course is coming. The second domino: over-leveraged tech stocks. Now, let's talk about the tech darlings that everyone thinks are invincible. I love technology. I invest in technology, but what I don't love is insanity. And that's exactly what we're seeing in certain corners of the tech market. Companies with no profits, no path to profitability, and business models built on burning through venture capital like it's kindling. These stocks are trading at valuations that would make the dot bubble blush. The AI hype has created a feeding frenzy where investors are throwing money at anything with artificial intelligence in its pitch deck. Here's a reality check. 90% of AI startups will be dead within 5 years. They're burning cash at astronomical rates. And when the funding dries up, and it will dry up, these companies will vanish overnight. And if you're holding their stock, your money vanishes with them. The NASDAQ is filled with companies trading at 50, 60, 100 times revenue, not earnings, revenue. That's not investing. That's gambling. And when interest rates stay elevated and money gets expensive, the biggest mistake retail investors make, valuations collapse back to reality with brutal speed. The third domino: cryptocurrency beyond Bitcoin. I'm going to say something that's going to make the crypto fanatics lose their minds, but I don't care because it's true. 95% of cryptocurrencies are going to zero. Bitcoin might survive. It has first mover advantage, brand recognition, and a legitimate case is digital gold. Ethereum, maybe it has utility in the smart contract space, but everything else, the 20,000 plus altcoins and tokens floating around in the digital ether, they're going to disappear like smoke. Most of these tokens have no use case, no adoption, no development team that isn't going to abandon ship when the hype dies down. They exist solely to transfer wealth from uninformed retail investors to early insiders who dump on them at the peak. We've already seen this movie before with ICOs in 2017 to 2018. Billions of dollars evaporated, and it's happening again right now, just with different names and slightly different technology. People are putting their retirement savings into digital tokens that will literally cease to exist within 18 months. And nobody's warning them because there's too much money to be made in the pump and dump game. The perfect storm is brewing. Here's what terrifies me. These dominoes aren't isolated, they're connected. When commercial real estate crashes, it takes real estate risks nobody talks about. Down regional banks. When regional banks fail, credit markets freeze. When credit markets freeze, over-leveraged tech companies can't raise capital and they collapse. When tech collapses, investor sentiment turns negative across all risk assets, including crypto. This isn't speculation. This is how financial contagion works. One falling domino hits the next, and before you know it, you've got a full-scale crisis on your hands. The question isn't if this is going to happen. The question is when. Now that I've scared you good. Fear is what keeps you alive in the financial markets. Complacency is what gets you destroyed. But here's where I separate myself from every other doom and gloom prophet out there. I'm not just going to tell you what's going to collapse. I'm going to tell you exactly how to protect yourself and, more importantly, how to make millions while everyone else is losing their shirts. See, the beautiful thing about market crashes is that they create the greatest wealth transfer opportunities in history. The 2008 financial crisis, I made money. The dot-com bubble, I made money. The COVID crash, I made money. Not because I'm lucky, because I'm prepared. Every crisis has winners and losers. The losers are the people who see the warning signs and do nothing. They freeze like deer in headlights, hoping everything will just speculation versus real assets magically work out. The winners, they act, they reposition, they get liquid, get defensive, and get ready to buy assets for pennies on the dollar when the panic sets in. Which one are you going to be? Because time is running out, and the assets I warned you about in part one are already showing cracks. Let me show you the survival playbook. Step one, audit your portfolio immediately. Right now, today, you need to open up your brokerage account and take a hard look at what you own. I want you to ask yourself 3 brutal questions about every position. If this asset lost 50% of its value tomorrow, would it destroy my financial plan? Do I actually understand how this company makes money, or did I buy it because some influencer told me to? Is this investment based on future hopes and dreams or actual current cash flow and profits? If you answered yes to question 1 or no to questions 2 and 3, you need to sell. I don't care if you're sitting on gains. I don't care if you're down 20% and don't want to lock in the loss. Your ego is not worth going broke over. Get out of speculative positions. Get out of unprofitable tech stocks. Get out of altcoins that you can't explain to your grandmother. Get out of commercial real estate REITs that are trading like everything is fine when their underlying properties are hemorrhaging tenants. Step 2, build your cash position. Cash is not trash. Debt, leverage, and silent financial killers. I'm so tired of hearing this ridiculous mantra from people who don't understand market cycles. Cash loses value to inflation. They scream, you know what loses value faster than inflation? A stock that drops 70% in 6 months. Right now, with money market funds and short-term treasury bills paying 4 to 5%, cash is actually earning a real return. And more importantly, cash gives you optionality. When assets are collapsing and everyone is desperate for liquidity, you become the buyer of last resort. You can name your price. I recommend holding 20-40% of your portfolio in cash or cash equivalents right now. Yes, that's aggressive. Yes, that means you might miss out on some upside if I'm wrong and everything keeps going up forever, but I'm willing to sacrifice some upside to avoid catastrophic downside, and you should be too. Step 3, focus on quality and cash flow. The assets that will survive and thrive through the coming collapse are the ones that have real businesses underneath them. I'm talking about companies with strong balance sheets with minimal debt, consistent profitability and free cash flow, competitive moats that protect them from disruption, dividend payments that prove management confidence, essential products or services that people need, regardless of the economic environment. This means consumer staples. This means healthcare. This means utilities. This means boring, unsexy businesses that how smart money protects itself. Nobody wants to talk about at cocktail parties, but that actually make money year after year after year. Yes, these stocks might not double in 6 months, but they also won't go to zero, which is more than I can say for half the garbage trading in the market right now. Step 4, short selectively if you know what you're doing. Now, for the more sophisticated investors out there, this collapse creates extraordinary short selling opportunities. But let me be crystal clear. Shorting is dangerous. You can lose more than 100% of your investment if you're wrong, and the market can stay irrational longer than you can stay solvent. That said, if you understand the risks, there are specific sectors and companies that are begging to be shorted. Commercial real estate, companies with occupancy rates below 60%, unprofitable tech companies burning through their cash reserves, regional banks with heavy commercial real estate exposure, altcoin platforms and exchanges that facilitate trading in worthless tokens. You can short individual stocks, buy inverse ETFs, or purchase put options. Each has different risk profiles and time horizons, but the key is to be selective and size your positions appropriately. Never put more than 5% of your portfolio in any single short position. Step 5, prepare to be a buyer. Here's where fortunes are made in the aftermath. When assets have what to avoid before the next crash, collapsed 50%, 60%, 70% from their peaks, when everyone is terrified and swearing they'll never invest again. When CNBC is running, "Is this the end of capitalism?" segments, that's when you deploy your cash. The greatest buying opportunities of your lifetime are coming. Quality real estate that was overpriced at $500 per square foot will be available for $200. Tech companies with actual profits and products will be trading at single-digit PE ratios. Blue chip dividend stocks will be yielding 6%, 7%, 8%, but you can only take advantage of these opportunities if you're liquid when they arrive. If you're fully invested in garbage when the crash comes, you'll be forced to sell at the bottom just to raise cash. You'll lock in massive losses and miss the recovery entirely. The bottom line, act now or pay later. Look, I know this is uncomfortable. I know you want to believe that everything is going to be fine, that the market will keep going up forever, that your portfolio is safe, but that's not how markets work. That's not how reality works. We are at the end of an extraordinary bull market fueled final wake-up call, must watch, by cheap money, speculation, and delusion. When the music stops, there aren't going to be enough chairs for everyone. The only question is whether you will be prepared. I've given you the roadmap. I've shown you the dangers and the solutions. What you do with this information is up to you. But remember this. In 6 months, in a year, when the assets I warned you about have collapsed and people are crying about their losses, you will look back on this moment and realize you had a choice. You can act now and protect yourself. Or you can hope I'm wrong and risk everything. I'm Kevin O'Leary. I've made my fortune by being right when others were wrong. The choice is yours. Make it count